Ever wondered how to make your money work for you? Investing is one of the most powerful ways to build a secure financial future. But before you jump in, it's essential to grasp the basics. How your money can grow, and a sneaky little thing called inflation that chips away at its value over time. Think about it this way. Every year, inflation nibbles at the value of your cash. On average, it runs around 2 to 2.5% annually. That means the $100 you have today might only have the buying power of $97.50 in a year. It doesn't sound like much, but it adds up. So, what about that savings account you've been diligently putting money into? Unfortunately, it's probably not keeping up. Traditional savings accounts often offer interest rates that are lower than inflation. This means that while your balance is technically going up, the actual value of your money is slowly decreasing. It's like trying to run up a down escalator. The solution: investing instead of letting your money sit. You put it to work in assets that have the potential to grow faster than inflation, like stocks or real estate. By strategically investing, you can create wealth through things like dividends, interest, or rental income. With the right approach, even small, consistent investments can blossom into something significant over the long run. One of the most incredible concepts in investing is compounding. It's often called the eighth wonder of the world, and for good reason. Compounding is simply earning returns not just on your initial investment, but also on the interest you've already accumulated. It's a snowball effect for your money, turning a small amount into a much larger one over time. Real estate is a classic investment path that many people take. It can generate income in two main ways: through monthly rent from tenants and through the appreciation or increase in the property's value over the years. But it's not a walk in the park. Real estate investing requires a good amount of starting capital, not to mention the ongoing effort of maintenance, finding tenants, and managing the property. These hurdles can make it a challenging option for beginners. If real estate feels a bit too hands-on, don't worry. Another popular route is investing in stocks. When you buy a stock, you're buying a small piece of ownership in a company. Your investment can grow through capital gains. That's when the stock's price goes up, and through dividends, which are regular payments some companies make to their shareholders. So, how do you actually buy stocks? You'll need a broker. This used to mean calling a guy in a suit, but today it's as simple as signing up for an online platform. With just a few clicks from your phone or computer, you can become a shareholder in some of the world's biggest companies. Of course, investing in individual stocks has its risks. A company's fortunes can change quickly, and its stock price can be volatile, going up and down. Picking winning stocks consistently is incredibly difficult, even for the pros. For those who prefer a less bumpy ride, there's a fantastic alternative: index funds. Instead of betting on a single company, an index fund lets you buy a tiny piece of many companies at once. These funds track major market indexes like the S&P 500, which is made up of 500 of the largest US companies. This automatically diversifies your investment, lowers your risk, and typically comes with much lower fees. History has shown that over the long term, Lacoste index funds often outperform the majority of actively managed funds, where a fund manager is trying to pick individual winning stocks. For most people, index funds offer a simple, effective, and reliable strategy for building wealth. Remember, no investment is completely risk-free, but you can manage that risk. The key is to adopt a long-term perspective, diversify your holdings across different assets, and practice patience. The market will have its ups and downs, but a steady hand will help you navigate the storms. Whether you choose real estate or stocks, a long-term approach is absolutely crucial. Don't let short-term market noise or scary headlines dictate your decisions. Your goal is to let your investments grow over years, not days or weeks. So, when is the best time to start? The answer is as soon as possible, with a couple of caveats. Before you invest, make sure you've paid off any high-interest debt, like credit cards, and have built up an emergency fund with 3 to 6 months of living expenses. Once you have that safety net, time becomes your greatest ally in the market. And the best part, you don't need a fortune to get started. Thanks to modern brokerage platforms, you can begin with whatever you can afford. Even small, regular contributions can grow into a substantial amount over time thanks to the magic of compounding. Getting started is simple. Choose a reputable online broker with low fees. You'll go through a quick process to verify your identity and then fund your account from your bank. From there, you can start researching and making your first investments. Once you're invested, here's a crucial piece of advice. Resist the urge to check your portfolio every day. This can lead to emotional decisions, like panic selling during a downturn. Instead, trust your long-term strategy and let your investments do their thing. Finally, never stop learning. The world of finance is always evolving. There are countless amazing resources out there, books, blogs, podcasts, and YouTube channels that can help you expand your knowledge and refine your investment strategy over time. Investing might seem intimidating at first, but it doesn't have to be. With the right knowledge, a patient mindset, and a consistent strategy, anyone can start their journey to building wealth. It's all about starting early, staying the course, and investing in your future. Thanks for watching, and don't forget to like and subscribe for more content to help you on your financial journey.